All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market has opened lower, has just kind of drifted higher all day here today, up about 7 points. It's kind of the similar environment to what we've been seeing, and the bears have just zero teeth when it comes to any sort of pullback, and every sort of pullback really kind of gets bought up here, and it's not to a rocket ship type of degree, but just that kind of slow, steady, consistent type of buy up that continues to come into this market. And today is definitely some light volume, and that has been a characteristic of this last move. It's been a very light volume type of move for many names and for many stocks that are out there, but the bulls still have absolute control of the of the market internals. And if we come in and look at something like the bullish percent index, I mean, they just keep on taking it higher. In fact, it's set to hit a 52-week high here for the bullish percent index. And in fact, if I clean this up, get rid of our indicators here, and let's get rid of the log scale and see where this kind of truly sits. You can see the S&P 500 is not anywhere back to its highs from September. Bullish percent index is. And, it's pretty much just every day, more stocks are kind of added to the bullish side of these point and figure charts. And, no real sign of pullback, no real sign of erosion here, but, clear overbought nature to it. And, that's what the bears still have, right? The bears have had overbought. They continue to have overbought, and they'll probably have overbought for a while. But it's still absolutely there. When we look at just something like the number of stocks trading above a 7-day moving average, right, which is generally the first thing that starts to change when the control is being wrestled, it's at 450. This is over 90% of the S&P 500 is trading above their 7-day moving average. It doesn't get much more overbought than that. We rarely see it more overbought than that. We can come to the number of stocks trading above a 20-day moving average. We can see 458. Rarely do you find periods of a market where it gets higher than that. The reality is, just whatever metric we want to look at, it's bullish, and it is just incredibly overcooked bullish. Have we seen this type of overcooked bullish nature before? Yeah, we have. It's pretty rare. It is pretty rare to see, but there's a very prominent case where we have seen it, be this extended, where the market internals just kind of keep on going up, even though they're overcooked, and even though there's still a lot of worries and fears out there in the market. And let me go and show you that time period. It may surprise some. I'm sure it won't surprise some of you. But in 2009, we saw the market internals improve and go on up, right? And we get up into this area, and the market had made a monster rally to get here. The internals are bullish but overdone. May and June, market kicks off, and then in July it really makes this move. And the market internals very overcooked, very overdone, and the market just continued to grind on higher. Now, there were at least pullback waves in this, right? There were pullback waves in this. There haven't been a lot of pullback waves here of late, but we're in a kind of a similar type of situation to 2009. Now, what's 2009? Well, if I kind of back this out to to a weekly chart and kind of expand the time horizon here a little bit, you can see that 2009 happened, and it wasn't like things just decided to turn down and go lower. Right? There was some chop and waves in 2010, but it wasn't like it was, oh well, hey, you know what? Things have to push on lower here. But this is kind of the last time we've seen them this overextended this long. I looked back in 2010, and yeah, we saw them overextended, but not to this degree. To this degree overall. And if we go into 2012, we had this kind of move at the beginning of the year that came off of this kind of pullback, but they weren't overextended the way they are right now. In fact, the market vibe number back here for much of this time was in a 6 and a 7 area. And, right now it just keeps oscillating between 9 and 10. May even hit an 11 today. It's very, very difficult, nigh impossible to hit an 11. But there is that potential, here today with what is, with what we're seeing in the internal. So, continues to be strongly controlled by the bulls. If we go and we take a look at things like transports, they continue to be strong. They're pushing into new short-term highs here today. We see small caps pushing up to their 200-day moving average, grinding on higher here. The Dow Jones is, kind of flirting with these kind of what some are saying are going to be resistance levels. We don't know that they're going to be resistance levels, right? They were resistance back here, but market conditions are quite a bit different. They're quite drastically different, right here and right now. Now, I've shared my thoughts on the market overall. I believe this market's incredibly overcooked, but it's also a market where we don't see the bears have a huge case when it comes to earnings, when it comes to economic data. They have little pieces here and there, but they don't really have a great foundation, of serious erosion. They have the foundation of slowing. They have the argument of slowing, but they don't have an argument of contraction. And for the bears to really sink their teeth and get a real grip on this market, they're going to have an argument of contraction, or they're going to need the news cycle for trade negotiations to completely change. Because right now the news cycle is strongly on the bull's side when it comes to that. I do think this market's vulnerable. I think it's vulnerable to a really hard, fast, steep drop. But so far, there's no sign of that coming into play, and no sign of that, actually happening. For the challenge this morning, I was bumped out of my XLY. I basically said, if I'm losing more than 1,000, I've got to go. And I was a little patient with it this morning and made another move. I just said I got to go. And it doesn't put the challenge out or anything like that. But what it does do is it takes away my anticipatory, money, right? This, and I talked about when I got in, I want to be I'm trying to anticipate just a little bit in terms of some of the downside action, and because I want to be in when it goes, and I'm not quite sure it'll give me an opportunity to get in when it goes, because it could be an overnight type of thing, but in the next day I'm having to way overpay for my options. But what this does is it doesn't change my bias. It doesn't change my ultimate look. It does, though, change the fact that I'm going to need to await confirmation in order to, play a downside bias. I've looked at several setups out there. Some of the setups that I'm most liking. Some of the things like an Alcoa, which are just not there just yet. We've talked about several names, and the names we've talked about, none of them are really there yet. An AMD, it's just not there. Not breaking below the lows of the prior day. And so, from a bearish perspective, there just isn't anything that I can get into that wouldn't be that anticipatory type of thing. From a bullish standpoint, the trade is kind of simple, and it comes down to, do I want to make it? Here's Bank of America. right? Bank of America, we talked about this morning, path of least resistance probably up here to about 30. The hourly look here on it, breaking back above the 7-hour moving average on a higher low. And you know what? This is something that, that I've looked at. If we price out the options here, let me pull them up. If we price out the options, they're not bad. They're not bad at all. The 8th of March, 28 and a half. The spreads are a little bit more than I would like. But I can come out just a little bit longer, get a little bit better of a spread, not pay too much more for the option, and get a decent delta here for it. So, this is something that, I've looked at, I've priced out. We have the banks lagging here today because of HSBC. But that is something where I mentioned this morning, I don't think it's going to be more than a one-day thing here, in terms of HSBC's effect on the banks. Now, if the market decides that, hey, it's topped and it's going down, the banks are going to go down. They're going to roll over. But from a technical standpoint, we're getting some pretty positive action here when it comes to Bank of America. And something that do I put about $1,000 on it and run with these 28.5s? And that's what I am looking at. You'll notice the open interest is 0. These were just opened up here today. They were just opened up because of the option expiration from last week, and so they're no open interest here yet. But if you look at the volume on them today, let me come in here and find that. You'll see there's been some volume on these odd ones, so there will be some open interest on those. Come tomorrow here with them. So looking at that, it sets up for a pretty easy risk reward, pretty easy, stop out point type of thing. I think there's quite a few of those out there. And, it's not that I look at this and say, well, the probability of direction higher is, overwhelming or incredible. In fact, my biggest concern with it is that it gaps down in the morning, stops me out, turns around. I think the risk of that is actually pretty high. But it's one where the setup itself is a strong setup from a risk reward type of standpoint. And, we have the JP Morgans of the world kind of in that similar standpoint here. And, we have some of the laggards in the banks, but, they are starting to kind of turn around. The Citigroups of the world. We have the XLF. So, very, very interesting group, interesting sector, price action today given what HSBC was. And something that actually sets up with a pretty good risk reward. So I'll be looking at that going into the close. I think if I had to make a decision absolutely right now, I'd wait until the morning and look to buy a flat to slightly lower open on these. But, again, I'll make this decision as we go closer into the close. Stocks like FedEx, which I'm very bearish on, love the gap down from last week, rallying back up a little bit. All I need to do is to kind of see a little bit of rally here, the break below the 7-hour moving average, and I can use that to go ahead and get into the downside there. But just not quite there, just yet. So those are some of the things that I'm looking at. As far as signals out there, we don't have a whole lot of brand new signals coming into the market or into different stocks. Buckle does have a trend rider bull forming on it here today. Now, this is a stock that can, when it starts to move, can really start to move, and can move a couple dollars in a couple day period. Now we're going to have a lot of these smaller retail type companies reporting earnings over the coming days, over the coming weeks. This is kind of, this next or this last period of earnings season. That's what we generally have, are these smaller retailers. So that's going to come into play. But we do have that kind of piercing the upper Bollinger Band, signal coming in here to buckle, and is, one of those kind of, forming a different type of signal. IBM is kind of indicative of what a lot of stocks are out there. They're just kind of grinding slowly higher, and we have some contracting bands and everything else associated with them, and there's kind of a more typical type of chart. Now this morning I also mentioned that I'd be looking at Deere. And Deere is very interesting to me. We've seen a lot of the earnings and everything else, and this is a company that tends to trade on a expensive multiple. When you compare it, especially to Caterpillar, it tends to be expensive. It caught a downgrade here this morning, pushed. Is one of the few stocks that are lower, but you can see the big volume from last week, right? And anytime you see that type of volume, what do you know? Well, there's some sort of event, right? Some sort of data, some sort of information, and in this case, earnings. And I think it's held up pretty well. It doesn't really give a good risk-reward entry for anything to the downside. Here with this downgrade, I think it's a little bit more of a chaser to the downside more than anything. But overall, on my radar, and one that one I think could definitely see some, weakness, come into it, but I don't think the price action in and of itself, sets up for a good risk reward, at least, not here and not yet. Now, last but not least is Alibaba. This is a company, long term I'm very, very bullish on. And, it's one that I have personally, I've been buyer and seller and holder and, with a longer term position, in and out. And it's been very good to me. Today, making a very interesting move. And it's an interesting move on volume after a very kind of breakdowny type of move on Friday. Volume was a little elevated, but Friday we had some options expiring. So we see this is something where the potential for this kind of 1, 2, 3 type of candle day to come into play is absolutely growing and is high. You can play it with a stop on today's low, and that's one of the things that I'm looking at here, as far as potential to the upside. But, Buckle, Bank of America, BABA, right? Tickers that start with B, here for the upside. Alcoa, AMD, really for me kind of two that very much eyeing for the downside there. But, as things sit, I do want to see, where we go into the close here. And looking at things, I do expect a flat open tomorrow. So I don't think I have to jump in right here. I can wait for a little confirmation. But overall, we'll be looking at these and hopefully, get the challenge, rolling in the right direction with the next trade on one of these names. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.